Good morning. It's Thursday, October 10th, about 6 a.m. Central Time. Overnight, the precious metals are higher after yesterday's consolidation and muted response of the Fed minutes. To quickly recap here, futures started the session stronger, fueled by bargain hunters. However, they lost ground before ending the session essentially flat on the day. Some critical takeaways from that Fed meeting: we saw a substantial majority of Fed officials had backed the decision to cut interest rates by 0.5%, but some said they would have preferred a quarter basis point cut. Almost all agreed that the upside risk to inflation had diminished, while the downside risk to employment had increased. That's why we want to monitor two events here today: initial claims and also CPI. One is an employment data print, the other is an inflation data print. So to quickly look at the equity markets yesterday, because it's very important, the Dow Jones Industrial Average rose 1%. The S&P 500 hit an all-time high. That's the one that we really want to watch here today. Some of the reaction function to how the CPI comes out. The NASDAQ is within 2% of record territory, and the CBOE's volatility index had declined 2.6%. Now, oil futures did fall 5% over the last 2 days, and they are up about 1.5% right now. Now, looking at the overnight action in precious metals, China did announce new stimulus measures in some respect. We expect more fireworks over the weekend, and I'll get into that in a minute. Looking at the gold market, up $8 at $26.34. Silver futures up 20 cents right now at $30.86. Both of these markets are right near their highs of the overnight session. Copper futures just slightly higher at $4.40, and finally platinum up $8 at $9.65. So shifting gears to the economic data. So today's focus is going to be the latest inflation data reading. The September CPI number is due out at 7:30 a.m. Central Time, and economists expect a year-over-year price gain of 2.3%, which would mark another post-COVID low. So the Federal Reserve, they'll be watching this number closely. You look at the CME's Fed Watch tool, this is where I will transition after the number comes out. So I'll look to see what the response is in the swaps according to the CME's Fed Watch tool. Right now, you got about a 20% chance that the Fed leaves rates unchanged, 80% chance that the Fed cuts a quarter basis point. I'll be watching that initial claims number, where the number is expected at 231,000. Last week, we saw 225. So if we get that lower inflation data, we get the job losses staying at this elevated level, this could shift gears and bring the 50 basis point cut back on the table. We only need it as precious metals trader and as macro traders just to come in a slight bit here. That could drive everything higher. It could drive gold, silver, treasuries, foreign currencies. The dollar and yields could get lower, so you really want to get ready. Now, what matters most here to the copper and silver market, because you could see that reaction, but you're going to need to see a little bit more to boost these prices back up, to get copper over $4.50, to get silver futures back over $32, and that comes back into China. Now, volatility did grip the Chinese stock market overnight, and it ultimately edged up higher. Investors are awaiting an outcome from a planned fiscal briefing over the weekend. Again, this is why I said it's very important to have a futures trading account so you could possibly take advantage of these types of movements in the market, especially if those hopes and everything that's put into this are dashed by the Monday open. So the hopes for more stimulus to keep this market and this rally alive is what the local markets are looking for. Any disappointment of lack of new major stimulus would really mean that hedge funds are going to continue to sell another record amount of Chinese shares, and that's what really broke this market earlier. That was the selling pressure that I said that happened in the silver market, in the copper market earlier in the week. Now, what I'm looking also at is the 1 week performance to see the scores on the board and where are we at. We have silver down 5%, platinum down 4%, copper down 3%, and gold down 2%. So quite a bit of pressure there. Now, looking at something else, what I do at night is I put out a slide deck generally on Twitter that covers all the different charts that I'm looking at. So if you look at the December versus March silver spread, we have a lower high on the chart and no indication of any supply imbalance. Now, despite silver's recent sell-off, investors like you guys are stepping in and buying here at these support levels. So what we did, we saw ETF holdings. Those rose in the silver market, and those are at some of the highest levels we've seen over the course of the year. So the investor is stepping in and a dip buyer. That's why I say at 85-1 on the gold silver ratio, I think that's more of the accumulation phase that you're getting. Once you start to get the breakdown of 60-1, 30-1, things like that, that's when it's time to unload some of those shares there. And that's where you get your silver up at your $50 and your $80 an ounce. Now, looking again at the squeeze scenario on silver, I did put out a chart on the COMEX inventories. Those are still rising. So there's plenty of supply that's out there on the silver market. Gold futures, if you look at the ETF holdings, they are flat right now, but historically, remember what I said, the registered investment advisor who controls many of everyone's in the retail wealth out there, they'll wait for confirmation of that first interest rate cut before they start trimming, planting, pruning, and going into some of the gold ETFs. Now, one other thing we looked at here was total global inventories of the copper market. They're continuing to consolidate. We'll really want to see which way that's breaking. Are there more inventories coming out or less inventories? Something else I want to note to help people out, because I do have a lot of you that reach out to me directly and I welcome those calls. People were asking, what is another way to look at support and resistance levels? My suggestion is to look at a 15-minute chart over the previous 5 days. Oftentimes it'll give you a lot of key levels of support and also key levels of resistance in areas of pockets where order flow had diminished. Also, something else, we do have the latest track record on our Global Opportunities program, which is a hands-off approach through our CTA, and then also we have a Metals Alpha program as well. Reach out to me if you'd like to see any of the performance track record of those particular programs that we offer. It is going to be a lot of fireworks today. Gold and silver, don't be triggered if they have a wide fluctuation. You don't want to look at having those stop losses too tight on this market because of the volatility is most likely going to increase, but you do want to pare down your position sizing if you're going to want to stay into this particular game. I think your critical level of support on the gold, 26.20, about $15 lower from where we were here, and about the lows of yesterday's session and the overnight session. Below that will be 2,600. Below that's going to be your 50-day moving average at 25.68. Been trading a bit too much S&P 500. Getting to the silver market here, again, your critical level of support is going to be the trend reversal point at 30.34, but I think more importantly would be 30.03. That would be the Fed's low. So if you go back to when we had that Fed meeting, that's where we pressed down to before bouncing and rallying up to about $33.22. That was about the contract high, and it was only about 4 sessions ago. I think if we break below that level, we'll probably briefly test that 50-day moving average, and we may see some buyers come in and step into that market. So again, I believe we're in the accumulation phase. I also believe we're in a series where the chart pattern suggests that we are seeing higher lows on the charts, and those are the types of bull markets that we look for, and we look to add on those types of dips. You got any questions, give me a call. Again, CPI coming out, going to be highly volatile, as well as that initial claims data. You got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, go get them.